Good evening, sir. Today, me, Simran Shrestha, along with my team members Oshika and Nilima, will be presenting a financial analysis of Delta Airlines over 10 years period from 2014 to 2024. So, the aviation industry is known for its sensitivity to global events, and Delta's journey through decade reflects both its challenges and resilience. And that this analysis will walk you through Delta's major financial metrics like revenue, net income, cash flows, and other profitability frameworks. So, talking about Delta Airline is one of the largest global carrier headquartered in Atlanta, Georgia. So, it operates more than 4,000 flights daily across six continents. Delta Airlines was founded in 1924 and it has evolved into Legacy Airlines. It is well known for its extensive network, operational efficiency, and customer loyalty programs as well. So, over the last decade, Delta has navigated major shift in the industry, ranging from expansion and profitability peaks to severe downturn caused by COVID-19 pandemic and the gradual recovery that followed after COVID-19. So this is the this bar diagram represents the financial performance of Delta Airlines from 2014 to 2024. So as you can see on the bar chart, the peak in 2019, the sharp drop in 2020, and the steady upward climb post 2021 are clearly visible. And this visuals helps makes it easier to track how external crises like pandemic can disrupt the long-term financial stability and how managerial action plays a role in the recovery. So, talking in detail about the financial analysis. So, revenue increase from 40,362 million in 2014 to 61,643 million in 2024. This trend reflects the corporate life cycle theory by Dickinson 2011, suggesting that Delta was in growth and maturity phase and the expanding market share before the 2020 downturn. Talking about net income and crisis impact, net income was stable and strong from 2014 to 2019, but it dropped drastically in 2019 with loss of 12,385 million due to COVID-19 pandemic, and which aligns with the crisis management theory by Pearson and Clear. This shows how unexpected shocks requires firm to restructure and adapt quickly. Talking about the post-pandemic recovery from 2021 onwards, net income and operating income rebounded gradually. For example, the operating income improved from 5,995 million in 2024. So this recovery suggests efficient cost management, which aligns with the managerial finance theory as well, which emphasizes strong financial planning in volatile times. And moving on to net cash flow. The net cash flow was volatile in early years, including negative flows from 2007, in 2017, 2021, and 2022. However, it stabilized by 2024. So, according to working capital management theory, also managing receivables, inventory, and payable is key to restoring liquidity after major disruptions. And moving on to profitability ratios, Delta's return on equity, return on assets, and return on investment all dropped in 2020, but it recovered strongly after 2024. So this shows how improved efficiency and profitability supported by Penman's financial analysis model and valuation principles from Damodaran. And talking about the capital structure shift, the debt to equity ratio rose sharply during crisis, peaking at 45.93% in 2020, indicating high reliance on debt. But by 2024, it declined to 3.93, showing Delta's strategic effort to reduce the risk and strengthen the equity. This change supports capital structure theory by Modigliani and Miller, which explains how companies optimize their debt and equity to balance the risk and value. So, for further presentation, I would like to invite Nilima.
Thank you so much. Hello everyone. Good evening. Today I'm going to describe about financial history. Now, talking about financial history overview, Delta financial journey from 2014 to 2024 reflects three clear phases: growth, crisis, and recovery. Between 2014 and 2019, the airline experienced stable revenue growth, rising from $40 billion to over $47 billion. Net income and operating income also increased, showing strong operational efficiency. Return of return on equity peaked at over 45%, reflecting high shareholder value. However, in 2020, the COVID-19 pandemic caused a major downturn. Revenue dropped to $17 billion and net losses to over for 12 billion. Fixed costs like aircraft leases, the impact through data managed to maintain positive cash flow through external financing, rising its debt to equity ratio sharply. From 2021 to 2024, Delta rebonded revenue recovered to over $61 billion, net income improved, and the company its financial health. The debt to equity ratio dropped to under 4% and profitability metrics like ROE and ROA returned to healthy levels. This timeline highlights Delta's ability to adapt financially and strategically to both opportunity and shocks. Now, moving to the next slide. Forecasting methodology. Our forecasting uses a combination of traditional and modern tools to create a realistic and adaptive model for delta futures. Uh, first time series analysis identifies trend and seasonality in historical data using tools like ARIMA and moving averages. This helps us project revenue and expenses based on demand and fuel cost cycles. Second, regression models estimate financial outcomes like net income based on external variables such as GDP, fuel prices, and available seed meals. This helps us assess the delta sensitivity to income changes. Third, ratio forecasting. Ratio forecasting looks at future performance indicators like ROE, ROA, and ROI based on efficiency, capital structures, and profitability trends. Fourth, we use scenario planning to model a optimistic base and pessimistic future. Each scenario adjusts revenue, cost, and cash flow expectation depending on different external conditions. Finally, cash flow forecasting is done using both direct and indirect methods, estimating operational inflows and adjusting net income to ensure liquidity planning. And this blended methodology ensures our forecast is not only data driven but also adaptable to real world validity. Now, moving to the next slide. Next slide is AI in financial forecasting. Artificial intelligence is reshaping for how companies approach financial forecasting. AI at Delta, AI helps analyze vast data sets and deliver faster, more accurate, and adaptive forecasts. Sometimes crucial in a volatile industry like aviation, machine learning algorithms can predict revenue, expenses, fuel prices, impacts, and booking trend by learning from historical data. Natural language processing or NLP extract insight from unstructured text like earning calls and social media to understand investor or customer sentiment. Predictive analytics platforms such as Google AutoML and Amazon Forecast combine economic signals, weather and demand data to guide pricing, route planning, and revenue management. Lastly, automation powered by AI enables real-time anomaly detection and automatic dashboards updates, reducing manual workload and boosting forecasting speed. Now, I want to pass over slide to the Osika.
Okay, so starting with strategic implication for Delta, the use of AI makes Delta more competitive in terms of strategy. Firstly, predictive maintenance, fuel efficiency models, and intelligently planned labor allow AI to reduce cost control, overhead, and reduce wastage. Second, AI increases demand forecasting based on real-time information such as booking and economic variables. This will help Delta implement dynamic pricing and take even quicker decisions supported by data concerning route changes. Thirdly, there is an increase in financial resilience. The use of AI scenario planning assists Delta to plan to deal with the shocks such as surge in fuel prices or currency fluctuation. Planning of liquidities and early warning system means the specified risk in finances are discovered and solved very fast. All in all, be able to AI will enable Delta to behave proactively, not just in reaction, which will help Delta promote long-term profitability and agility. Next slide. Risk and uncertainties. Regardless of great forecasting capabilities and restoration after the COVID 19, Delta still has a number of risks in the future. To begin with, increased cost of fuel is a serious issue. Supply constraint and geopolitical tension have the potential to ramp up prices, destroying margins, fuel hedging notwithstanding. Secondly, world economy recession or inflation crisis can discourage both leisure travel and business travel. In result is the result is on revenue, especially international flights. Thirdly, the shortage of labor and increasing wages, especially pilots and mechanics, may result in disruption in operation and increasing costs. Fourthly, passengers rates offered by domestic and foreign carriers have become competitive, and this aspect might compel price reduction or introduction of additional service which restrains the margin. Finally, businesses may also be affected when international revenue is converted into US dollars due to the currency violation. These risks underline the importance of good forecast and financial flexibility to strategic delta in future. Next slide. So, to summarize, Delta Airlines has been able to cocoon itself through a turbulent tenure once it recovered in aftermath of the pandemic of 2020. It managed to return profitability once more in 2024. Projection generated using AI with the support of various forecast approach make us believe in more revenue, operating income, and profitability growth. Hidden in the importance of AI in forecasting is the enhancement of efficiency, strategic planning, and resilience in case of uncertainties. Nevertheless, the outside obstacles related to fuel prices, labor matters, and worldwide uncertainty exist. In order to succeed, Delta will need to carry on with duality of operational excellence and customer service on one hand, and economic discipline on the other, with innovation of forecasting and planning. Next. Next slide. So these are the references for our presentation. Thank you for your time and attention.